So today we're going to talk about this article I found. Stock market analyzed today. GameStop mania highlights shift to dark trading. I don't really know that much about dark trading, but you know, we'll learn together. uh, Stock market analyzed today. GameStop mania highlights shift to dark trading. A record 47.2% of U.S. equity trading volume in January was executed outside public stock exchange. Huh. I mean, that's crazy. 47%. Up from 39.9 a year earlier, according to data from Rosenblatt Securities. I hope I'm saying that right. A brokerage firm. Before 2020, the percentage of what is known as dark trading has hovered just below 40% for years. Now, on some days, more than half the shares that change hands in the US are traded in various off exchange platforms. That happened for the first time on December 23rd, three times in January, and again on Tuesday, when an off exchange volume hits 50.5%, an all time high for single day trading. Hmm, that's pretty crazy. I mean, so many more people getting into it. Behind the shift is the influx of small investors, many of whom have been empowered by zero commission trading apps and are stuck at home during the illness. Online brokerages that cater to individual investors, including Robinhood Marketing, send many of their customer orders electronically. Trading firms such as Citadel Securities and Virtual Finance. I mean, I can see why all these small investors are switching over to that because of like the whole thing with GameStop and these different brokers like preventing people from buying and pretty much forcing them to like pretty much just sell or kind of like hold on to it. I'm pretty sure those are the two options they had, and I could see a lot of people being like fed up. Like really, like the one time they were actually going to make a lot, they were suddenly halted, and I feel like a lot of these small investors are like feeling like the game is rigged and that they should find other ways of doing it. Maybe that's why the big demand is there. Um, let's see. These firms typically execute small investors' orders privately instead of routing them to public markets, including the New York Stock Exchange and the NASDAQ stock market. Hmm, that's interesting. The investors often get slightly better price terms from Citadel Securities and Virtue than they would if orders were sent to exchange. That's crazy. I mean, so like they're actually getting a better deal by not even going through like the exchange. Huh. I mean, that sounds actually pretty good, but at the same time, like that's probably so complex. Like who knows like how hard it is to do it that way? Because like I never even heard about dark trading until today, so I'm surprised that there's so many people that actually figured this out. Um, some analysts worry that the shift away from on-exchange trading could erode transparency. When fewer traders take place on exchange, there's a less information publicly available about the price that the investors are willing to pay for shares. It raises the risk that traders will pay more when buying and get less when selling than they should. I mean, that's the thing too. It's just like, yeah, I can see a lot of things happening, like people getting like overpaying or not getting what they should be getting. Because I mean, at least with the stock market, um, with the public exchanges, at least the number you see, everybody else has the same amount. Like it's not like you're getting um, it's not like you're getting like you're in a paying more, you're getting less. Like like this is the price. But the problem, like doing it this way, I mean, who knows what price you're really getting? You might be getting a good deal, or you might not be. Uh, we're definitely in an area where the level of off-exchange trading raises concern," said Justin Shack. Not sure. A partner at Rosenblatt, or Blade, I'm not sure how to say that. Once you start to see half or more of activity taking place away from public markets, you have to ask, what is this doing to price discovery and market quality? Are we getting to levels that hurt the market? I mean, that's the thing. Like, yeah, if there's so many people doing this, because I mean, I feel like they're doing it because they don't trust some of these brokers, but it makes you wonder, like, what the real value is for some of these companies if stuff like this is happening. Uh, Off exchange trading isn't new. For years, okay, institutional investors have bought and sold shares on private venues known as dark pools. Huh, what? Dark pools? I mean, this almost sounds like some sort of like Dungeons and Dragons. It's like what? Dark trading and dark pools. Um, while brokerages have sent small investors orders to internalize, as the retail trading platform is run by Citadel Securities and Virtue are known. Such firms pay brokerages for the right to trade against their customer orders, a practice that has drawn fresh scrutiny since the GameStop frenzy. What? Wow, that's mind blowing. Both internalizers and the dark pools must release data on each trade after execution. But unlike exchange, neither dark pools nor internalizers are in the business of displaying price quotes, a key ingredient in allowing the broader market to see what a stock is worth and how price is moving. I mean, that's the thing. Like, I mean, I personally have always liked the stock market because you can see the price and you know, like, hey, this is the official amount of what the stock costs. But I mean, if you don't know, like, I mean, unless you're like an expert in this, I mean, how do you know what is a good price? Like, how do you even know you're paying for what it's actually worth? Like, I mean, I don't know. Maybe this is totally speculation, but I could see some of like these groups like taking like small percentage off of each person. I mean, even if you got like a little bit, that could be so much money they're just getting off of people, and they have no idea they're overpaying. And especially for new investors or stock traders, like if you're not like somebody's done this for a long time, I feel like you could very easily be overpaying. Other countries take a stricter approach. In Canada, for instance, all trades must be executed on exchange. In the European Union, a 2018 regulatory overhaul is sought to push more stock trading onto exchange, though its results have been mixed. Yeah, I personally would rather it be like on an actual like exchange, and so that we know what the price actually is. Off exchange trading platforms say that the current level of dark trading in the US isn't a problem. For one thing, since many of the most actively traded stocks have share price of just a few dollars, the percentage of off exchange volume is lower than measured in dollars than when measured in the number of shares traded. Okay, so I guess they're saying it's not that big of a deal. Say dollar terms, around 4% of trading volume is executed outside exchange. Hmm. Um, Executives are at electronic trading firms, as well as analysts and academics, stress that individual investors benefits from having their orders sent to internalizers because of the better price. In terms of the ecosystem and who ultimately benefiting, it really is the retail investor. Virtue chef executive Douglas, I don't know how you say it, that last name, said on a earnings call Thursday. I mean, maybe. I mean, like, if people know what they're doing, I mean, maybe he is right. Maybe they will get a better price. Still, some data suggests that growing the heft of internalizers might be hurting the rest of the market by depriving um, institutional investors of access to liquidity. When institutional investors buy or sell stocks such as Apple Inc. or Amazon, I mean, no, I'm saying American Airlines Group Inc., with a high degree of individual activity, the transaction costs are more than 3 times higher than with stocks for which less than 10% of trade volume comes from individual investors. Huh, that's crazy. 3 times higher? Um, the trading analyst from GTA Babelfish sent a recent report. Let's see, GTA Babelfish. I mean, it's kind of a interesting name. Which advise mutual funds, pension funds, and other institutional investors on how well they're executing trades, measured transaction costs by examining the degree to which stock price moved up or down after a fund manager began buying or selling shares, a metric closely followed by Wall Street trading desk. That's interesting. What's this last part? These transaction costs are very insidious. Wait, said GD Babelfish, partner of Linda. I'm not sure how to say her last name. It's something that eats into your overall return, and you're doing this over and over and over again every time you are trading. I mean, yeah, I mean, like, if you're trading on like a regular basis, and if you end up paying like a very small amount more, like let's say even like 1%. If you're doing that every single time, I mean when you buy, that's like 1%. You sell, that's like a percent, or maybe it's even less. Maybe it's 100%. Who knows how much it is? But say like let's say you have to pay like yeah like a percent every time you buy, you sell. That's 2%. You buy, you sell. That's 4%. You buy, you sell. That's 6%. I mean that's only like six. Like you only bought and sold something like 3 times each, and it's like it can add up really quickly. And I mean, I could see, I can understand the frustration investors have because of GameStop and them trying to find other alternatives. But I don't know. I feel like it's such a risky way of doing it. Like I don't know if the government is really like make sure that things are going like the way they're supposed to. I mean, who knows? I mean, I can see some people even going like offshore like firms to do trading and just to be like separated, but there's such a big risk with all of it. I mean, unless I mean, who knows? I mean, maybe there are ways of doing it safely, but I mean, I definitely would not want to do it that way. I would rather do it the traditional way, but um I mean, that's pretty interesting. I mean, I never knew that dark trading was a thing. And it's a pretty interesting article. I like how they went really in depth with it. And I would like to hear from you guys. would if this was something you could figure out how to do, would you get into this, or would you stay with the traditional like the normal brokerages? Because like I don't know, like for me personally, I'd rather play it safe, but who knows, I would like to hear from you guys and see if you guys had the option to do it, would you do it? And if you enjoyed this video, leave me a like and thank you very much.